Hey gang, BA here with the BC Cartel. It is Sunday, December 26th, 2021. In this video, we're going to discuss crypto portfolio allocation techniques so that after we finish with this short video, hopefully you'll have a better idea of how I've allocated capital amongst the different categories in order to get you to start thinking about how you want to approach it going forward to gain exposure in a manner that you feel most comfortable with. Also, I want to remind you here at BC Cartel, we're focused on three things. Number one, help you learn about crypto investing. Number two, show you how we trade and invest. Number three, why we are so focused on the crypto market space. We are focused in the crypto market space because crypto is still one of the best asymmetric bet venues available to the retail investor. The adoption rate of crypto is far surpassing any other technology that we've witnessed to date, and also our cartel narrative, which is the underlying thesis of why we are so bullish on crypto. You can see the narrative in front of you. Nothing has changed. Without any further ado, let's get right to it. All right, so here's what you see in front of you is on the left hand side here. You'll see I have the long-term HODL versus trading allocation. So I've got 87% of my total capital in the crypto space allocated toward long-term investment. I have 12% some change allocated to trading, short-term trading. So that's how I've carved out this. Now, if you were to step back even further, this isn't all the capital I have to my name. Okay, this is just capital I have allocated to the crypto space. So the first thing that you want to do when you're trying to determine how much you're going to allocate to crypto, let's go up here to the top. Number one, you need to determine how much you want to allocate. For me, it's 1 year's worth of savings. I'm willing to risk losing a year's worth of savings on an asymmetric bet like crypto. These bets don't come along too many times, in a 100-year span. So for me, I have to take advantage of this. And 1 year's savings is something I'm comfortable with. 1 year's worth of savings is different for everybody. So you have to come up with your own type of guidelines for how much capital. Older folks like myself, it's easy to, especially for folks that are in their prime earning years, can save quite a bit of money. So you can do a lot with a year's worth of savings. For young folks that are single in their 20s with a decent income, very few bills to pay, if I were in that situation, again, hypothetically, in my 20s, single, no baggage, I would be, every penny I made, I'd probably be living in the woods, inside of a tent, funneling every bit of cash I could save, borrow, or barter for, and put it into the crypto markets to try to get my stake on. When you have families, you have obligations, it gets a little more complex. So anyway, you have to come up with how you want to approach the crypto strategy. But looking back, again, I want to emphasize this isn't, I don't have my whole entire net worth tied up into crypto. So I keep a lot of cash on the sidelines. This is just a small percentage of, we'll say, an overall net worth, kind of holistic type approach. So anyway, you've got to come up with your own way to do that. All right, once you've figured out how to allocate, how much you want to allocate, and how you're going to go about it, again, we are not financial advisors. I cannot offer financial advice. And I have to say that crypto investments are extremely risky. You can lose everything in crypto investments. I have a handful of projects I have lost everything in. So this is still very, very speculative. But Bitcoin and ETH is my foundation. And I don't think you'll find too many people that argue with that thesis. So Bitcoin and ETH as a foundation, and then you can, there's nothing wrong with putting, say, 35 to 50% of what you're going to allocate to crypto into Ethereum and Bitcoin. All right, so that's just some guidelines. Again, you have to figure out how you're going to skin that cat. And then the rest of the projects that you find interesting, you can allocate capital as you see fit. You know, that may be $50 for some folks, it may be $250 for others, it may be $5,000 for other folks. So it just depends where you're at in life and how much you're allocating to the crypto space. All right, another point I want to make is I will put in an initial amount depending on what kind of market environment we're in, and I'll dollar cost average all the time. I mean, I'm constantly looking at my cost basis for the coins that I have, and I'm constantly, if I can buy good projects where my cost basis is higher than the current price, then I'll continue to dollar cost average into those projects to lower my cost basis. So it's just a technique I constantly use across the board in whatever market environment we're in. So, all right, so hopefully the overall HODL versus trading allocation makes sense. Some of you may not be into trading at all. Don't worry about it if you're not. It's just how I approach it. No right or wrong here. And when I say long-term hold, just a brief explanation there. I'm playing for a large move up. I thought would maybe have occurred the end of this year. It did not. Market does what the market's going to do. I'm playing for a large move up into the first half of next year. If I hit the targets, my long-term portfolio over here, I may sell 90% of that and cash it in. And then I'll wait for the next bear market and then buy all these projects back again, hopefully on the cheap. My long-term projection on this is 2 to 4 years. That's kind of what I'm looking at. That's kind of a loose guidance, but that's kind of how I look at it. I'm always assessing where we're at in the market to make my determination about when I want to try to get my exit strategy in place. Okay, so over here to the right, you'll see I have a pyramid chart with just my long-term HODL portfolio breakdown. So layer ones, brief explanation. If you imagine, for this, we're going to call the internet layer 0. Okay, layer ones are the protocols that are built on top of the internet. It's the blockchain highways. So layer ones include projects like Ethereum, include Polkadot, Solana, Terra Luna, Near Protocol, just to name a few, just so you have an idea of what we're talking about there. And then DeFi 1.0, I don't know why that came out like that. DeFi 1.0 are projects like Compound, Aave, Uniswap, the DEXs, Synthetics, those types of things. Layer 2s, really all these other projects are layer 2s because they're built on top of these layer 1 projects, but I've broken the categories down a little bit further so I see what I actually have. So layer 2s would include things like Matic. It would include things like Cartesi, like Cirrus, any of those applications that are built on top of layer 1 protocols in order to execute business models. That's all these things are. They're executing business models, making things more efficient on layer 1s, bringing services into the blockchain that exist on the internet. It's the applications. Okay. Metaverse and gaming, self-explanatory. Supply chain, self-explanatory. So just right up the line there. Now, store of value, I have to tell you, this is Bitcoin. All right, even though Bitcoin's a layer 1, it's really a store of value right now. So you might be looking, okay, you just said over here that Bitcoin and ETH is your foundation, but you only got 2% in Bitcoin. Well, again, when I mentioned over here, we need to take a back up and take a holistic view of everything. I have stock trading portfolios where I have a lot of Grayscale Bitcoin Trust. I have Bitcoin futures, so that's sprinkled in other areas as well. So even though I've only allocated, and again, this is an allocation model. This is not what these categories currently represent in my portfolio. Some of these things are monstrosities now inside my portfolio because they've gone up. The categories have gone up, 20 times what I initially put in. But this is how I allocated my capital. All right, so hopefully that piece right there helps a little bit. Now let's go to kind of my long-term HODL portfolio. So these are the different categories broken down with all of the different projects and protocols. As I get time, I'll try to put out here where you can buy these things at. Predominantly, I buy everything either on Coinbase Pro, KuCoin, Gate.io, Uniswap, and then there's a couple other flyers out there that you don't need to worry about. Trust Wallet, PancakeSwap, and Trader Joe. So, but anyway, that's 90% of these can be bought on Coinbase Pro and KuCoin. Anyway, no need to discuss any of those. These are just the different categories. You can refer back to these. But this is what's not showing in here is my trading portfolio. Typically, I churn that fairly quickly when we're in a bull market. Since mid-November, I've been very static with that and holding. So not much action in there other than a few winners that I've been able to take off for, upwards of, 100, 200, 400%. So anyway, that is, hey, that concludes the video. Hopefully this has been helpful, and hopefully kind of spurs you to think about how you want to build your portfolio. And again, there's no right or wrong solutions. It's just what you feel comfortable with, what you're knowledgeable about, and then I go from there. But Bitcoin and ETH, you can't go wrong with that. I really like Dot, Atom, Rose, and Luna. Those are on the layer ones. Those are really, really good projects. They're starting to move right now. Some of the layer 2s that haven't moved right now is the Graph. Matic is on fire. Super. That's exposure to launch pads, NFTs, and gamings. Cartesi hasn't launched, and Cirrus hasn't launched yet either. So those are some in the layer 2 categories that I expect big things out of that haven't really fired on all cylinders yet. Anyway, we're about 13 minutes into this. Hope this has been helpful. Everybody have a good trading week, and this is BA signing off.